Unfortunately, we've been very humbled with respect to being bullish here at Kelly, and now 'tis the season to act justly, love mercy, and walk humbly. So the screens are green today. We feel pretty good about it. We have clearly underestimated the amount of motion and rhetoric that has been driving stocks so far this year. And on your outflow number, too, that's absolutely correct last week. But keep in mind that we've seen net outflows the entire year of 2018 when everyone's been worried about recessions and peak earnings and peak markets. So this has been a market that was aching for a break-in for a while. It broke, and now we think markets are headed higher. I think stocks are higher 6 months from now and 12 months from now. And investors just got a heck of a deal in terms of buying, we think, excessively oversold sectors like financials, industrials, and technology especially.
Craig, what do you think? I mean, for a long time, the mantra was buy the dips. Lately, though, it's been sell the rallies. What about this one? Is this for real, or what are you going to do here?
We believe we're in what we call a volatility event, like 1990, 98, 2010, and 2011. In those cases, the market dropped about 17 to 20% over 9 to 12 weeks. Then it rebounded, and the market resumed its long-term upward trend. So we expect that this time as well.
Any idea when or what the catalyst will be to begin it again?
It sure feels like a bottom to us now. If this turned out being the bottom, it would look exactly like 1990 did, and very similar to 98, and even 2010 and 11.
Craig, so what you're saying is there's no fundamental reason for the markets to sell off here. It's just what you're almost calling is a market storm, a volatility event. You don't see any signs that people would need to get out of the market, that stocks would need to be repriced the way that they have been?
In those 4 previous volatility events, 6 months later, all of the fears that were right at their height at the bottom proved to be wrong and even irrational. I would expect that to happen this time as well.
Brian, we heard from Scott Minerd. He's expecting maybe a rate cut next year. How do you think the market would take that if, in fact, that were to be the case?
Well, unfortunately, I didn't hear what he said.
He says there's a 50% chance that the Fed could cut rates next year, as opposed to just raising them twice.
Yeah, I think that might send the wrong message. What does the Fed know that we don't know, number one? I mean, if you take a look at where earnings are through this pullback, Bill, what I think is interesting is that forecasts have only gone down about 100 basis points. The average earnings growth rate since 1990 has been 7%. I know they were all worried about earnings going down and everything, but even if we're sitting at a 6, 7, 8% earnings growth rate at 3% treasuries and 2% GDP, that's actually a pretty good environment to own stocks. So I think the Fed cutting without knowing exactly what his methodology is and why they think 50% of why they would cut, I think that would send the wrong message. I think the better message is that, this has been a volatility event. I'll tell you, since we published our 2019 year ahead piece, we've been going around talking to investors around the world, and they are the most bearish we've seen since 2008. People are scared. They don't know what to do.
You blame them?
They just want January 1. No, I don't blame them, because given the fact that this has been an emotional, rhetoric-filled sell-off that has really, we think, nothing to do with fundamentals. Yeah, there's concern and everything out there, but United States stock market in terms of earnings and growth is the most stable in the world. And we think this has been a volatility event, quote unquote, that's been led by pure speculation and rhetoric.
Craig, do you think there's D.C. dysfunction to worry about? Yes, we were just told that Powell's job is secure, but let's say it's not. Or let's say the president is upset with his Treasury Secretary. Look at the departure of Mattis. Look at the government shutdown. Is there a real quandary for investors, Craig? Is there damage to this economy?
Well, I'm a value investor, and I don't pay much attention to the government. I just go where value pulls me. I do agree with the response earlier that it's a great setting for owning stocks, and it seems that all of the fear is currently built in.